Alright, guys, so I want to go through the mindset shift which I had, which completely changed my trading. Like, genuinely changed the way I see the market, changed the way I see the skill of trading, and just completely rewired the way I actually see trading for what it truly is, right? And that is seeing trading based off of math, seeing it based off the probabilities, because it explains exactly why everything happens, why you win, why you lose, why you get break even. It's not it like when you get into trading, you think trading's all about the P&Ls, the concepts, the strategies. You think it's about the payouts, but when you look at it from a mathematical perspective, it explains why every single thing happens in the market, right? Every single trade you take is just probability, right? Every execution you take, if you take good execution, it's going to improve probability. Every bad execution you take, it's going to lower your probabilities. And when you start looking at the markets in more of a statistical, mathematical, probabilistic way of looking at the markets, everything's going to make sense, which is going to help your psychology. So let's get into it. So first of all, you need data. You need data on your trading system. You need data on your trading in general. This is mandatory. You have to do this. You can't get away with not doing this because you're just leaving so much improvement on the table. So the reason why you haven't unlocked this mindset is because you don't have data. You can't think probabilistically about a system when you haven't even measured it, right? Can you even tell me your win rate percentage? Can you even tell me your average risk to reward? Can you tell me your average losing streak? Probably not. And that's a problem. Like, genuinely, if you don't know these things, then this should be a problem to you and you should get started on this immediately. So before you can actually have that mindset shift, the numbers have to exist. You have to see the numbers. You have to understand some of these really important metrics which basically make up why everything happens in your trading. So the most important metrics is win rate percentage. Obviously, that's percentage of trades which win. So the number of trades which win minus your total trades. Average risk to reward. So this is, on average, how much R you make on a winner versus how much you risk. By the way, every single loss should just be -1. We should be thinking in risk to reward. Every single time we speak about a trade, we should be speaking in risk to reward. So a loss is -1R and a win is whatever it wins. When you put win rate percentage and average risk to reward together, that can tell you whether your system is profitable or not, and these are probably the two most important things, besides expected value, which I'll get into in a second, but these are the two most important things. Now, sample size, you're going to need at least 100 trades before these numbers are solid, right? Yeah, you can get some decent numbers when you're at like 50 or so. That's giving you a good thing, but 100 trades kind of gives your system a full run through. You're going to experience losing streaks. You're going to go on the winning streaks. So that's a good starting point where you can actually be like, all right, is my system performing well? Is it profitable? So on and so forward. And then your max losing run, your max losing streak, the worst streak you've actually had is very important to understand because it can really help your psychology in knowing if you go on, say, a 2-trade losing streak and you know your max losing streak is 4 trades, then you're like, okay, I'm not underperforming. This is a normal losing streak within my system, okay? And all this data does is it's going to tell you whether you're performing or you're not performing. So say you get 100 trades of data and then your next trades are not performing to those 100 trades, then you're like, okay, maybe I'm underperforming. Maybe there's something going wrong with my trading. Have I been slipping up on my plan? Have I not been executing properly? And you can go back and look at that sort of stuff. This is how the math and the data actually helps you to improve, to see if you're performing, and will give you clarity with every single trade you take. Now, outcome is not decision quality. The outcome of a trade realistically does not matter because it's all probabilities. All that matters is that you followed your process. A good trade can lose. A bad trade can also win. The market doesn't care. The market doesn't care about your system. It doesn't care about your concepts, all that sort of stuff. The market at the end of the day will do whatever it wants to do. So this is exactly why you can take an A+ setup with the perfect psychology, the perfect everything. It could be 10 out of 10 every single thing, and it can still lose. But this is also why people can place a random trade and it will win. So if you lose a good decision, your process was right. It's just the result was unlucky, because at the end of the day, it's all probabilities. You still took the right trade. You just had a systematic losing trade, which is completely normal. Whereas if you win a bad decision, your process was wrong, you're probably more impressed by the result, and it's not actually a good thing. Because if you take a trade that does not fit your system, let's just say, I don't know, you took a loss and then you just immediately re-entered into the market on not even on a setup, and that trade ends up running and hits, and now you're in profit. This is really bad reinforcement for the long term, because now when you take a loss, you're going to be thinking, oh, well, I made it back that one time, I can just do it again. Not realizing in the long term how much that's actually going to hurt you, right? Now, when you make a good decision and you win, that's like 10 out of 10, but it's not always going to happen, because it's all probabilities. If I know I have a 60% win rate, I'm going to win 6 out of 10 trades, and 4 out of 10 of those are going to be losers. So mentally, if I take a loss, which I know the process was 100% correct, I'm okay with that. I'm okay with that loss. I can mentally recover from that, right? And another thing, this is why I'm so okay with taking a loss and then just getting off the charts and coming back the next day, because I know the probabilities are going to be back in my favor the next day when I have more price action to work with. It's a new day. Price is moving differently. I know it's going to be good, right? So this is why it's so important to follow your system, because the outcome isn't in your control. All that's in your control is the process that you went through to taking that trade, okay? The decision, that's really all that matters. Now, when you collect data, when you collect 100 trades, you start thinking more in the long-term lens. So the 100 trade lens is a good spot to be at, a very good spot to be at. Obviously, you want to be able to get to 200, 300, 400, so on and so forth, that many trades, but that takes a long time. When you get 100 trades, you're going to understand your maximum losing streak, like I said before, and you're going to know when you're performing well. So say in your data set, you've had a 6 trade losing streak, and that fits with your win rate and your average risk to reward. Now, if you go on a 5 trade losing streak, it's not underperformance. It's just a part of the system. If you zoom out, you see this is just going to be a pullback in the bullish structure, right? In the bullish trend, there's always going to be pullbacks. So this is exactly what it is. So you can always look back on these 100 trades and ask, is this normal inside of my probabilities, right? Whereas a lot of people who don't have data, if they go on that 5 trade losing streak, this is very, very normal with someone who has a high risk to reward system. A 5 trade losing streak is not that crazy. Like, genuinely, that's normal for those types of systems. Now, this is what I used to think. I used to think I'm broken. Like, I'm just a bad trader. It's my fault. Not understanding the maths behind it. So you might look at your last 5 trades and it might be, loss, loss, win, loss. And you're thinking, oh, my system doesn't work. I'm a terrible trader. The market is different. But that's not how it is. When you have data backed up and able to prove these things, you know it's not you. You know it's just your system. Whereas what someone who has data, who is a good trader, understands, this is normal. You know your max losing streak or your max drawdown or whatever, and you see the sequence of trades that are playing out, you just know that even though you've lost 2 or 3 trades in a row, the chance of your next one being a winner is very, very likely. Okay? You keep following the plan, you don't change anything. Now, let me tell you a story about one of the funded accounts I have at the moment. It was 2 of them. I'm pretty sure I took a payout and I had 900 balance. And so I was risking 300 per trade. So I said, okay, I have 3 trades of drawdown. If I lose 3 trades in a row, the accounts are gone. Ended up losing that first trade, right? And at that point, I was like, for some reason, my psychology was kind of cooked. And I was like, oh, it's all over. Like, there's no way I'm going to be able to bring this back. Even though I still had 2 trades of buffer left, I was like hating on myself. And I was really contemplating just risking 600 on the next trade to, try and get to 1200 balance or whatever. And then I started speaking to ChatGPT and I was like, what should I do? And then it told me, you need to follow your system. Why would you increase your risk for no reason? You have a statistical edge. And I went, yeah, right, of course. Why am I even thinking like that? And guess what happened? I lost the next trade, right? So then I'm down to 1 trade of drawdown. And then I went on a winning streak to actually reach that payout. So if I had not trusted my data, because I know a 3 trade losing streak in my system is possible, but it's pretty unlikely. If I would have over leveraged on that day, then I would have blown my accounts and I never would have seen that payout, not knowing that winning streak was just around the corner, right? So I hope that makes sense. Like, that's the best example I can give of it that actually happened to me. Now, the next thing is the only stat that really matters is expectancy. That's all it really matters. If you have a positive expectancy over 100 trades, you're technically profitable. So all we want to do is take setups that give us a positive expectancy, which is just our system usually. So everyone speaks about win rate and average risk to reward, but all that matters is your expectancy is positive. Anything over 0.5 is very, very good. That's exceptional. Very, very good. Very, very profitable. Anything over 0.25, you're probably making money. But if there's someone who's saying, oh, I have a 5 risk reward expectancy, then they're capping, they're not being realistic. Anything over 0.5 is amazing, right? If you could get it closer to 1 risk to reward expectancy, that's like professional trader level. So yeah, I'm not going to speak too much about this because it's just math. If you're interested in how to calculate your expectancy, just use a calculator or use this formula. Now, getting back onto the probabilities, one thing you need to understand is that every single trade is a fresh event. The last 10 trades you took have nothing to do with what the next trade you're taking is the outcome of that trade, right? Every single trade is a fresh event. The market doesn't owe you a win after a loss. The next setup has the exact same probabilities as the first one. There's no of course, in probabilities, it makes sense if you take loss, it's very likely your next trade is going to be a winner. But at the end of the day, it's always a fresh event. So this is the reason why I'm so okay with ending the day after a loss and coming back tomorrow. Is because the math will reset every morning, right? If you look at the probabilities on the trade you take after a loss, I can almost guarantee you it is a very low win rate, very, very low. Whereas if I have a 60% win rate and I take a loss and then I come back tomorrow, I know that those maths have reset, those probabilities have reset, and I have 60% chance of winning again, right? So maybe that day before I got unfortunate and I'd had that 40% loss. I know that if I just leave the charts today and come back tomorrow, the probabilities are going to be back in my favor. Whereas if I took another trade after taking that loss, you might think, oh yeah, it's going to have an even better chance of winning. But maybe that day the probabilities are not in your favor, so you're probably better off just coming back tomorrow. And that's the number one biggest tip I could give anyone watching this video, is that when you take a loss, at the bare minimum, you should take 30 minutes off the chart. I can promise you the trade you take after that loss is not going to win. Even better is just to come back the next day. I promise you, this is like one of the hardest things for people to do, but once I started doing it, it allowed me to actually have an edge. Okay? Now, you should have a fixed risk for every single trade forever. Like, if you take a win, like let's say you start a fresh funded account and you say, I'm going to risk $500 per trade till I pass. If you take 2 wins, you make $1,000, and then you double your risk and you take a loss, you've just completely ruined your edge. Like, you've completely ruined your edge. You've completely ruined the probabilities. You've completely ruined the sequencing of trades which could have passed you that account. So you should have a fixed risk all the time. You should never double down to make something back. Like I spoke about before, if I would have changed my risk on that time I had 900 balance and then I took 2 losses, then went on a winning streak, if I would have changed my risk to 600, I never would have seen those payouts. So you should, after you get a payout, you should decide how much you're going to risk and stick to that, because you have a certain amount of trades of drawdown. Because you've done, you've worked so hard to get 2 wins in a row. Say you're up 2 risk to reward, you're up $1,000, and then you double your risk because you get confident, and then you lose. It's like those 2 trades were for absolutely nothing, right? Absolutely nothing. So keep your risk fixed. Don't change it. Never double down to make it back, because it just accelerates blowing your account. Now, the final thing I want to speak about is stop trying to predict the markets. Stop trying to think that you know where price is going, right? Just execute on your strategy. Just execute when your system says buy or sell. Just execute. Your job isn't to know what the market will do. Your job's just to spot your setup that has a positive expectancy, that is a profitable setup, that has all the confluences you need to see, and then the outcome will do its thing, right? Let the probability play out. Don't mess with it whilst it's playing out. Just let the probabilities play as they should. So, for every single trade, you see the setup. Your system is either like, all right, this is a setup or not. Is this high probability? Yes. Okay, cool. Then you just have to execute. Keep your risk fixed. Have your entry. Have your stop where it should be. Have your target where it should be. Manage the trade how it should be managed based on your system. Like, don't do anything different than what your system says. Like, I know it sounds so basic, but you might be doing it and you don't even realize it. Whether that could be closing early, that could be going break even early. These small things will add up over time, I promise you. And the number one best thing I can tell you is when you take a when you take a trade, just accept the outcome for what it is, right? Whether it's a win or loss, it's just one sample of your edge, right? Your edge plays out over 5, 10, 100 trades. So the outcome of this trade isn't the end of the world. If you take a loss today, it doesn't mean tomorrow is going to be a loss as well, right? You don't, once you've placed your order, you have your stop loss, you have your take profit, you've done absolutely everything you can do. You can't do any more. You can't control the outcome of your trade. At the end of the day, the market will do whatever it wants. That's what I always say to anyone I interact with. The markets will do whatever it wants. It doesn't care about your system. You can control your risk exposure. That's all you have control over. When you click buy or sell, that's all you have control over, right? That's the entire game. So that's the mindset you should have before every single trade, is just to let the probabilities play out. if you have data and you're backed up on your system, you shouldn't be scared at all. You should have zero fear. You should have full confidence. If you don't have confidence, you're probably taking the wrong setup or you're risking too much. Just let the probabilities play out as they should. Okay? Now, I hope you guys enjoyed that video. Quick plug. If you guys are interested in learning from me or need a trading mentor, then I do have a school community where we do, I have a full course, daily trade breakdowns. I also include my premium data collection Notion template in there for free. One-on-one mentoring from me, and you'll learn my full system. And my mindset is, if you watch any of my videos, I work with the maths like this video is entirely about. It's what I teach in my mentorship. So if that's something you're interested in, then the link is there. If you're not, that's fine. Of course not. I'm happy to give free value either way. So I hope you guys enjoyed. I hope you guys learned something from this video. Going to be coming out with lots more YouTube videos. So like and subscribe for more content, and I'll see you guys in the next one.